Finance or rating is a very boring business to be in. And especially after eating food, very boring business to listen to. But I think finance, of course, is very important for all of you. And obviously, all of you are interested. How do I get finance at a lower cost? That's the challenge. Because most importantly, do you have it in you to get the finance at a lower cost? Especially I'm talking about the SME finance. So what we have made is a few slides for your information. This is culled out from our experience for the last 7 years. We rated about 19,000 SME units, so I'm just talking from that experience. Why low credit to the SME sector? I mean, SME and MSME now. The reason is because of information asymmetry. Now, this is a word which is being used often by various people, right from the governor of Reserve Bank to the manager of a bank while lending the money to the SMEs. Information asymmetry. What does asymmetry mean? Essentially is there's no regulatory supply of information. Inconsistency. Lopsided unreliability of getting the information to the lenders. Now, mind you, lenders are in business to make money. They borrow money from someone and give you money so that they can have their spreads. And if that spread does not come in, they have a problem. And the spread will only come in if you have reliable information. What is the impact? Now, if you see the impact, we have 2.6 crore units in this country. I mean, it's not a small amount, 2.6 crores. Out of which only 15 million are registered to do business. Out of which only 11% get finance from the banking system, which is not even 200,000 units. Now, that's an alarming situation. The rest of them depend on their friends, relatives, and moneylenders. Information asymmetry, suboptimal credit decision. Now, we have bankers here, 3 of them. You give them less information, they will not give you as much credit as you require. So it's a suboptimal credit decision. I'm making it simple. Can SME ratings or ratings reduce information gap? Yes. We have seen it over a period of time. The cost of information asymmetry, as you go down to micro, obviously the cost of low information is high because you get higher interest rates. As you go up, you get lower interest rate because there's a high symmetry. Challenges in the sector, just few brief experiential snippets coming to the fore. Inadequate information. Timeliness doesn't come on time. The information does not come on time. Completeness, accuracy of filing financial statements. And also the fact that the bankers don't have the appropriate skill sets. They may have few expert bankers to assess SME loans. But it's a huge sector. As I told you, it's 2.6 crore units, 15 million registered, and only 200,000 accounts. We need more bankers. We need more skill sets. Now, there is a short supply. Issues of scale, high transaction cost. If they have to lend to you, you're based in Tirupur or Gurdaspur or Badohi, it's difficult to assess because you're spread sectorally, geographically. Every 1 crore loan disbursed costs them high amount of money. So look at corporates. It's much easier, much lower on transaction costs. There are management constraints within the SME units. The financial infrastructure is weak and the governance is weak. When you're talking about clusters, you're talking about clusters where textiles, auto, chemical, etc., are based. Compounding of opaqueness by the consultants. I'm sorry if there are consultants here, pardon to them, but I don't mean to disparage them, but they also add to the opaqueness. Adequate skill sets, as I mentioned earlier, both within SMEs and the banking. Impact on borrower, inadequate credit, high cost. Impact on banker, higher NPA, lack of risk-based pricing, higher cost of assessing a proposal, rejection of good proposal. Now, this is what happens. Impact on the system, inadequate credit flow, deterioration in asset quality, adverse economic effect. As you know, SMEs contribute to the economy largely in terms of GDP, exports, etc. Can CRA, the credit rating agency, SMERA, can bridge the information divide? Yes, we can. $1 of information is $1,000 of credit. This is done by our partner Dun & Bradstreet some time back. Using SME ratings, We are a specialized agency created for you, and we assess risk based on various factors. And I will not go into that because it will take at least 20 minutes more. We have information across sectors, clusters, geographies, and rating categories. We have the experience of 7 years and 20,000 ratings across all these areas. We have proprietary model built over a period of time, tested, looking at default, testing again, working with the lenders. We work with various lenders to find out, have these companies defaulted whom we have rated 1, 2, 3, 4, 5, 6? And we find that if they have not, which means the model is working. A few highlights about SMIRA. We are a company floated by SIDBI, Dun & Bradstreet, and there are about 11 bankers. We have done about 20,000 ratings, and we have across the sectors and the economy. How do SME ratings enable this? Ability of the enterprise to generate cash flows. We look at the cash flows, business information, customer and supplier analysis, employee strength. Ultimately, it's the entrepreneur and the SME. We look at his background, his experience, his credibility, as Mr. Gadkari said. The 3 C's, the character, credit, and capital, raising ability of the entrepreneur. Manage cash flows, competence of the managers. Do you have a second line? Is there a corporate governance? How do you manage expansion, diversification, etc.? We have specialized personnel. We have rating committee approach. We have established models. And we have detailed management interaction when we do a site visit for every application that we get. Ratings enable greater transparency within MSMEs. We do site visits. We do bank statement verification. We do management discussions. Of course, bureau verification. Other qualitative checks. I won't get into it because of lack of time. A few highlights more. 7-year organization. And we have who's who as shareholders, both multinational bank, government bank, public sector bank, private sector banks, all leading banks who are lending to MSMEs. Benefits of SMIRA ratings have been already felt in the sector. We have done a study, including our partners have done a study on us. 21% of units have received interested benefit. Some of the banks are giving interested benefit based on your ratings. There are about 16 banks who extend this, right from 0.25% to 1%. 17% of units have received enhancement in their credit limits. Processing time has come down because we do whatever they do and much more. So it gives comfort because we always do this kind of benchmarking with them regularly. It gives them comfort. So if you take the rating report, you probably will be breaking the ice faster than required. 7 to 8% received reduction of collateral. 40% increase their confidence in the overseas market. We assign a number called DUNS number, which is a DNB number, unique identification code. And if you are an exporter and importer, this number will certainly help you in building credibility in the overseas market. Credibility is something which people look at very carefully. If you're dealing with Walmart, J.C. Penney, and top 1,000 Fortune companies, this number comes to your rescue. Our advice to all of you who have not been rated, get yourself rated, whether it is good, bad, ugly. It will always help you to create a track record for yourself. It will be a mirror. It will also help you to see where you can improve, because this is a fact of life which is going to happen. Don't try to dig the well when you're thirsty. That is my advice to all of you, because as soon as you get into Basel ratings, you'll be surprised. So start early, and you'll get to know what your ratings are. Asymmetry of information lead to suboptimal credit decision, and our rating can certainly help it. And I think I have nothing more to say than this. Thank you so much.